Hi everyone, welcome to our ESSEC Alumni webinar and thank you for joining us this afternoon. For those who don't know me, my name is Ian Ong and I'm the Alumni Relations Manager for ESSEC Asia Pacific. I'm very happy today to announce our alumni speaker Vivek, who is Director for Group Internal Consulting at UBS AG. He will be speaking on the topic of how Fintech should be seen as an innovation to address business challenges. Should you have any questions that you'd like to ask the speaker, please ask them via the chat group. We will try our best to answer them during the Q&A session. Without further ado, I shall now pass the mic over to Vivek.
Thanks, Ian. Very good morning, good afternoon, everybody. My name is Arul Jesuvivek Chinnappan, proud alumni of ESSEC. I did my executive MBA Asia Pacific course. To be proud that I was part of the first batch of this course back in 2016. And a bit of introduction about my career. So over 20 years of experience in information technology, predominantly in the banking and financial services, worked for various firms. Being with UBS for the last 9 years and part of a group internal consulting. So this function is basically looking after the business and process transformation projects across the business functions to mainly to make UBS is very much prepared in the competition of fintech. So that's very much introduction about myself. And today I'm going to talk about fintech and innovation to address the business challenges, especially at this COVID situation. There could be participants in this group who might have a very good understanding of even experience in the fintech. So I'm going to cover the very basics, what fintech means, and the flavors of fintech, how fintech capitalizing the opportunity at this COVID situation. And I'm going to explain, there are two angles how we can see fintech. I will explain in the coming slides. Then finally, I'm going to wrap it up, a business principle that both fintech firms and the big financial firms can adopt, which means it's a collaborative business principle I'm going to explain as well. Okay. So without further ado, I'll start with what does fintech mean? So there are many questions like what exactly is fintech? Is it a new business financial services model, or is it something like it's helping the existing financial services? So that could be like the questions like what exactly fintech mean. To answer this question, it's both. A fintech can be a differentiator that can come up, that can be emerged with a completely new innovative model that can disrupt the existing financial services business models. This is one angle of fintech companies or the business model. On the other angle, it can be an enabler too, which can help to address the business challenges that the big firms faces, because the banking is not a very simple business. It has a lot of complex processes, especially to comply with the country's regulations and policies. For example, for Singapore, MAS is the regulatory body. For Hong Kong, HKM is the regulatory body. It's not that simple to do any kind of a business, for example, wealth management or investment banking. You need to adhere to a lot of policies and regulations that has been set by the countries. And fintech can help to simplify or ease those business processes so that you can optimize your business operations and reduce cost. So that's how fintech can help. Second, so we talked about what is fintech, then who are fintech? Is it a company or is it something, a small firms or big firms? To be very honest, there's no one single answer for this. These are all the people or the companies can be fintechs. It can be a startup. Any tech-savvy individuals can also be their own fintech company. The regulators itself can be a fintech. For example, both MAS and HKMA has the concept of creating a sandbox and inviting people to come and innovate the new business models or to solve the business challenges. That can be in that way. Regulators also can be a fintech. Governments very much. I think that even the Singapore government and all the almost ASEAN countries have started to issue the digital banking licenses, right? They are play a big role in the fintech, corporates, venture capitals, even the academic and research institutes. There are some few universities from Europe, especially from the UK, they have their own fintech labs, and they are trying to come up with some innovative solutions under the enabler category to address the business challenges, right? Then the third part is how. How are they delivering their solutions under fintech? So they can come up with some new business model via technologies, or they can come up with some sort of a product or services which can address the challenges under the enablement. So if you want to, okay, without knowing it or not, we in this kind of a situation, we ourselves started using a lot of fintech services. For example, I don't know how many of you have gone to visited the bank branches. Nowadays, we are using very much app for every kind of a transaction. Seeing your deposits or whatever it is, payments, online payments, all the stuff. And even there are very good apps available in the market that you can do systematic investment planning. So which means that these are all the services and products that we can already start to avail under the fintech. Okay, so let's go to the next concept. What exactly the flavors of fintech? So we talked about who and what, but how exactly I am receiving the service or a product via fintech. Let's talk about the existing financial services model, which is the brick and mortar banks, including the bank I work for. So they are having different business functions. For example, they provide wealth management services, retail and commercial banking services, especially the regional banks like EBS, OCBC, UOB. And banks like UBS and Credit Suisse, they are pretty much in a big landscape in wealth management, asset management, and investment banking or other foreign exchange capital markets. And there are some banks, financial services. I mean, like insurance is also it's part of it. It's not bank, but it also comes under financial services. This is one aspect. Let's look at the other aspect, the technology. So today in this 2020 world, there's a lot of technologies being used as a backbone to support these financial services. Be mindful, these technologies are also going to help the fintech concept. So for example, the smartphone apps, cloud computing, big data, machine learning or artificial intelligence, blockchain, cryptocurrencies, open APIs. So these are all the technologies currently supporting the big financial firm. At the same time, with the smart use of this technology, you can see some new business models or even the enablers under the fintech. For example, payments and e-wallet. Imagine now every tech company, for example, Google, Apple, they are coming up with their own e-wallet concept. They don't go to banks to transact the money for the products or services that people purchase, including Grab. Grab even to be very advanced, they even come up with a Grab kind of a card where you can do even sort of a credit purchase. Digital trade platform. I will explain later what exactly this digital trade platform. This particular fintech model is heavily disrupting the existing trade finance business where many banks provide this service. Virtual banking. I mean, like, you know, there's a lot of big banks are already using website or apps as a kind of service, but there are companies who are going to provide only virtual banking, retail banking service without any physical presence at all. Then, robo-advisors. This is very interesting one, especially this one is mainly going to disrupt banks like us, UBS, in wealth management space. Because wealth management is it's a very, very complex advisory business whereby you need very experienced bankers with the support of very complex investment research systems in the back to provide a kind of investment advisory service to our big affluent clients who are basically kind of a millionaires and billionaires, and for which they need to pay a lot of money as a service fee to us. Imagine this is completely will be replaced by some sort of a robo advisors. So you don't need to go to meet any big bankers. And at the same time, all the same kind of investment advice, we can get it on the touch of your phone through some sort of apps. This is very much possible. Alternative finance, crowdfunding. I think nowadays you might see there's a lot of crowdfunding platforms available online whereby you can raise funds for your own startups or even entrepreneurship. Finally, there are the other two topics, the InsurTech and RegTech. Mainly these are, okay, InsurTech, I would say it's again kind of a disruptor. It can again fundamentally change the way how the insurance business is happening in this world. RegTech, I would say, is more like an enabler. I would again explain later how RegTech can help the big financial firms to simplify the complexity of the regulatory policies. I'll take a pause here. Are there any questions here? Because I am on the full screen mode, I cannot see any questions. Are there any questions at this moment?
No questions so far, Vivek.
Okay, good. Thank you. Okay, so this is okay. I think now you can kind of distinguish what exactly the financial services mean, what exactly the technologies that are behind in the back of financial services, and how the new business models and enablers are emerging in the name of fintech by bridging the gap between the financial services and the technology. Okay, so how it's going to benefit? So who are the beneficiaries of this fintech? Is it the customers, the people, or is it the companies? My answer is both. So both can be beneficial out of this fintech. How? Let's see. Let's look at the people first. Customers are always important, right? Without customers, there's no business. How customers can experience? Firstly, you will definitely get an enhanced, like a user experience. Okay, for example, if let's say a banker needs a client and explain, okay, how much of portfolio he has, how much of money that you have invested, how much debt that you own, what is the kind of a projected portfolio that you're going to have. If I explain everything, let's say in 30 minutes, imagine how much information that the customer can understand and grasp. But the same information in a very, very simple pie chart or whatever it is, if it's shown on your app, you can easily understand. So you don't need to get a very detailed explanation about what kind of service you get, what products you have, how much of it has. The same information can be conveyed into a very enhanced way through apps and charts in your, that's one advantage. Second thing is, it's transparent. It's like whatever you do, you can very much see, like your phone. Let's say you have very suspicious transactions on your card or whatever it is, you can very much go to your app and see, did I do this transactions? So whatever the service fee, everything is, there's no hidden cost, I would say. So it's pretty much transparent, which is going to save a lot of money for both customers and also for the banks. And thirdly, timely and accurate services. For example, now imagine if I have to go to a bank or a branch to open an account and everything, imagine how much of time it takes to go and show my IC and everything. Now you can simply scan your IC, attach it as a file on your app and open an account, and all the KYC verification, everything will be done just to have your like you can link your account to your SIM pass through your government thing. All the verification is done on time. So it's very, very timely, accurate services you can get. And most importantly, by availing all these timely, accurate services that are transparent, you are going to pay less fees or service fee or management fee to the companies. That is going to save a lot of cost. Because bank obviously big firms have to pay a lot for their rentals and taxes and everything to employ people and everything that can be reduced. And eventually, the reduced risk is it's a debatable. People might ask, oh, there could be risk as well in fintech, for example. There could be a lot of online frauds. Yes, it has advantages and disadvantages both, but well, if you look at overall, you can, I mean, like with the emergence of the use of a lot of technologies, we can reduce the risk a lot. How it's going to benefit the companies? So you can, I mean, like rather, okay, in the traditional model, imagine if they want to attract new clients with a kind of a traditional marketing or sales campaign model, they need to, they need to go and talk to a lot of people. They need to set up a lot of marketing campaigns, business conferences and all to attract the new clients. But now companies don't do that. If you look at, there's a lot of firms are promoting their ads about the services in social media, in Twitter, in Facebook, or even WhatsApp and WeChat. And the more enriched user experience you have, you can attract more clients. Eventually, it's about like it doesn't matter how much of ad that you promote, but if you have definitely an enhanced user experience, people will automatically, customers will automatically come to you. Personally, I feel that one of the reason is Grab is much more popular than Uber or any other service in this Asia Pacific world is it has a very, very enriched user experience. That's one of the reasons that they were able to acquire Uber market and like that. Uber's user experience was not that great compared to Grab. And it's also some new business opportunities. So banks or firms doesn't have to stick with their own business models. They can also start to avail this kind of a robo advisors or even virtual banking. It's not like, okay, only the fintech firms can do, the companies cannot do, or the big firms cannot do. They can very much avail this fintech. I will explain later how they can partner together. It is definitely going to help to drive the revenue growth, and most importantly, the enabler fintechs, it helps to reduce or optimize the operational cost of the big firms. For example, we in our bank, we started to use a lot of RegTech products that has helped to reduce our lot of operating cost, including the resourcing cost too. Because in the past, we used to do everything in manual with a lot of data work. For example, if you want to screen a new client, a wealth management client, you need to do a lot of documentation work to screen the KYC or the source of the income of the clients. So that has now been automated very much with machine learning and AI that help us to reduce a lot of cost. And risk and compliance simplicity. As I said, we need to again produce lots and lots of reports and taxing things in order to comply with the government regulatories. That can also very much be reduced with the help of fintech. Let's look at the trend. So this is the source. It's not my case. The source is from Bain. consulting company. So they produce, they did the kind of a market analysis, came up with this kind of a data. What is the percentage of the people purchase some sort of a financial service using digital tools rather from traditional banking models? 2017, 2019. The 2017 is a gray graph. 2019 is a red graph. It has tremendously increased across all the countries. There's nowhere you see there is some sort of inward declination. Every country has an upward trend, which means that, and in this COVID situation, if you, by end of this year, if you do the same graph, I'm very sure that this will again increase a lot, because now the situation is people cannot go out. I mean, like, we can't even, I mean, like, meet the people, and people will start to avail more and more digital services via this fintech opportunities, rather going for a traditional bricks and mortar companies. Let's talk about the COVID situation now. What exactly the challenges that we face in COVID? First, meeting people is not possible at this moment because of the circuit breaker. I'm sure it's not only in Singapore, almost all the countries in the world introduced this lockdown to avoid the situation of this spread of this virus. Right? So how the banks, the traditional banks, are impacted? For example, as I said, most client interactions are physical in nature, the traditional banks, and branches are still open countries like Singapore as an essential service. This is a risk. But imagine if you are a customer of a virtual banking or a robo-advisor. No physical interactions at all required. 100% virtual service is possible, including wealth advisory via apps and websites, AI chatbots. There are some companies even provide a kind of a chat, I mean, like a intelligent chatbot. For example, you can chat with a question of your investment. Like, I would like to invest like this. I would like to invest like this, and there's a AI running behind to provide an intelligence advisory service through your app itself, like the robo advisors. This is one aspect. The other aspect, we can't even go to office. Even myself, I work from home. No or very, very limited access to office. But is it possible that 100% work from home possible for big firms? Even for my firm, it's not possible. Because firstly, see, the branches must be open. That's one of the reasons. Second thing is, we have a very, very highly complex infrastructure systems. For example, the wealth management business that we do, the systems are, because it's a very, very confidential business, that you are not supposed to access the systems that has the client information outside of the office. This is one of the regulatory restrictions that it's not the bank's policy, but even the regulatory policy. So for people working in this kind of critical confidence systems, they must go to work, of course, with all the precautionary measures. This is very much possible, 100% remote work possible in this fintech firms. First, they have a very, very limited resource compared to big firms. They are in tens of thousands of people, whereas they have in fintech firms, you can see very, very limited people. And the second thing is, they have a very, very high-tech infrastructure. I believe most of the fintech technologies are operated out of cloud services, which is very much possible to be operated and support anywhere in the world. You don't have to go to a kind of a physical office to provide support or even service. So that's all I would say. Under these two aspects, fintech is definitely having certain advantages over the traditional brick-and-mortar companies, banks, and they can they can capitalize the situation. And you can see the trend, so that they can now, the companies, the big firms are thinking that if you are able to provide service with the 90% work from home is possible, why not 100%? There are companies started to think like that, because if they don't change, the fintech firms will be a tough competitor in the future. So customers will start to move away from the big banks to the fintech firms. So they need to change. I'll take a pause here. Are there any questions here?
No questions so far, Vivek.
Okay. Let's move on to the one example. As I mentioned earlier, let's take one example, a trade finance business. It's a differentiator model I said earlier. How fintech playing a kind of a role in this business as a differentiator. Let me start how the existing trade finance business works in the traditional world. It's a multi-trillion-dollar business. It's basically banks plays an intermediary role to connect the people in the world. Two kind of people. One kind of people are the importers, the other kind of people are the exporters. Let's say I'm a small scale business person from Indonesia. I produce or manufacture chairs, and I've got a customer in China. He's keen to buy my products, but how can I transport my goods to the importer, and how can I ensure that I get the money back? At the same time, how can an importer ensure that I get the right product that what I saw online? And second thing is, okay, so it has the exact quality that has been committed by the exporter. So this is where the banks plays the intermediary role of connecting the importer and exporter, and they take care of the complete transaction. So they basically prepare the contracts with the certain agreements. Okay, this is an agreement between importer, this is the quality that you must maintain, and this is the money that has been agreed and everything. And so the banks normally takes care of this transaction between the importer and exporter till the importer gets his good and the exporter gets his money. So it takes about average 5 to 10 days to complete a transaction. And bank playing as an intermediary, it will take some sort of a service fee, which is pretty high, because you need to trust the bank on the basis of trust and taking care of all the formalities of this transaction. So the bank will take as a service fee. So this is how the trade finance business works. So how this business is going to change in this fintech term. So one of the main technology is used in this trade finance business is the blockchain. So how blockchain is helping? So basically, I am an importer. There's somebody, an exporter, somebody's exporter. I have my own ledger of all the transactions. The importer has his own ledger to have transactions. I cannot see his ledger. I cannot see my ledger, and that's why we go to banks. Imagine there is a ledger, a common ledger in between importer and exporter, and this ledger can be accessed by both in a concurrent manner. So that's how the blockchain plays a role. So it's basically a distributed ledger technology. It's digital, and it's decentralized. It's like, so anybody can go and update this ledger of any transaction that they make. Then in that case, how can I track my goods? So there will be a kind of a reference key created for every transaction, and that reference key will be monitored and see whether the transaction is successful and the payment is successful and the goods are received successfully. So with this use of technology, you don't actually need an intermediary at all. So you can simply go to any website or app that is supported by this blockchain, who can provide the same service with a very, very less service fee, and it's open platform. You can even identify the matches. You don't need to go to a bank to find a potential match for your product. So it's very transparent, and it's the transactions are very much digital. So the invoices, the contracts, everything is digital, and you can have a digital signature so that it's purely recorded, it's audited, and everything. So nothing can go wrong. And finally, you are paying a very less service fee to the particular platform. So that's how this digital trade platform is helping. I mean, like again, so helping the customers to enable the business. In fact, actually, I've seen a news. There's a car dealer in Singapore. They recently purchased I mean, like basically bought a car, imported cars from the manufacturers directly without any intermediary, and they used this digital platform to make a transaction, and they got the cars as goods imported in Singapore. So this has been tested successfully, and it worked very well. And imagine how much of money they would have paid to go to some other kind of intermediary in the past. So this is how I mean, like, so what then banks will do? Will they stop this trade finance business at all? Probably not. It's still a very attractive business for many banks. But what they do is they will also try to establish this kind of a digital trade platforms, and they will also play a role. Obviously, they cannot take the big service fee as they took it in the past, but they will still play a role and to be kind of a competent, and they will try to still attract the clients with these new technologies rather to be to be move away from the business. I don't think that's a wise idea to move away from this business. Still, as I said, it's a multi-billion-dollar business. So now you can see how fintech plays a role as a differentiator to disrupt an existing business model in the market. Any questions? Okay, let's move on. So the next one is, we are going to see another fintech concept, which is the RegTech as an enabler. As I said, in my company itself, there are lots and lots of procedures, processes, reporting to be done, to be complied with government regulatory policies and processes, and that it's not easy. You need to spend a lot of money, a lot of resources to do it. So that's I can give you what are the concepts behind this tech. Data management. You need to effectively manage to manage your customers' data. For example, KYC, know your client. So you need to completely assess the clients that you are serving, what kind of revenue background that he has, whether it is legitimate or not, and whatever transaction that he or she does, it's in comply with the regulatory. So there's no anti-money laundering, and every trade of the customer must be monitored, and there is no kind of a suspicious transactions, no terror financing, and no fraud detection. So nobody is doing a favor for any clients or for any employees. This has to be done. Cyber security, so that we need to be completely protected by so that we are not hacked, because in banks, like hacking the customer's data is it's very common, right? And so we need to be 100% protected with this kind of a cyber threats at all. And finally, the transaction and regulatory tax reporting. So you need to provide tons and tons of reporting to external, internal audit firms and the regulatory firms of your business. And how fintech can help. So there are all these technologies like blockchain, machine learning, robotics, biometrics are being used under these different categories that can help to simplify these kind of services that banks provide. So there are some companies which are basically products. If you can avail those products, which is basically built based on robotics or AI or machine learning, and that you can pretty much plug that product into your existing banking infrastructure, and that product takes care of everything, the AI, KYC, AML, and that even provides some sort of intelligent automated reporting and all. So you don't have to spend too much of money or resources on this, and it's pretty transparent. It's very easy. So that's how it plays a big role in helping the big firms to reduce the cost and improve efficiency. I take a pause again here to take any questions. No? Okay, let's move on to my last topic, which is like, so what is the key behind this fintech? Definitely innovation is one of the key. And do you see fintech is a threat to big companies, or do you think the fintech is an opportunity? See, definitely in certain aspects as a differentiator, the fintech firms are threat to big firms. So here I am going to explain a principle called gorilla versus monkey, which I learned from my EABA class. So I'm very happy to use this principle to compare to basically for this fintech situation also. So gorilla means the big firms, including my company. The monkey is basically, I'd say, the small fintech firms. So it's a competition or game between a gorilla versus monkey. Both of them are going to use innovation as the key, and whoever is going to win in this competition, I mean, whoever is more innovative, they will survive. Whoever is less innovative, they will die. This is the universal principle, right? Why gorillas are not that innovative as monkeys? There are reasons. First, I am big enough. I am very much worried about my existing clients. My existing customers will never come and ask you, I want to have some innovative ideas. So basically, it's you need to handle, you need to approach a different set of clients to address what sort of innovative ideas that the customer wants, right? So in principle, the big firms, they don't go to their clients quite often to ask kind of innovative ideas. This is one challenge because they have a fear of losing existing clients. This is one aspect. And second thing is challenges in meeting the constant changes. For, as I said, the regulations are changing every year, every 6 months, even sometimes every month. So they are pretty much focusing on to meet the expectation of existing clients and to change their business model to meet the new regulations and all. So they have a very little time to think about this kind of. So innovation is like it's out of the box. So you are very much focusing on inner side, but you are not conscious about the existing or the outer side of threats or the business opportunities. This is one problem as well. And the third thing is, even though you have a very out of box thinking and everything, sometimes you have a very complex existing core banking systems and infrastructure in nature that it's very difficult to make those kind of changes in a very fast agile pace. So what you do, oh, okay, I have a very innovative idea, but in order to do this, I need to change my entire core banking platform, which will take about 500 million, which is too much of money now. So I don't change. So this is also one reason, and they resist to change. And after that, they will be disrupted heavily by some fintech firms. And as I said, the monkeys, the fintech startups, they have the higher potential threat. And so how can we avoid the situation? I want to be big. At the same time, I don't want to be eaten by a monkey. So nowadays, there's a kind of a concept called venture capital investment approach that a lot of companies started to follow it, especially banks like DBS and all. It's a kind of a win-win situation. So what you do is you don't see the monkeys, which is the fintech startups, as a threats, but partner with them so that you can face, I mean, like, you can face the situation both from big firms perspective and small firms. Ultimately, both of them are going to serve the customers, which are people, right? So by having this, so for example, how the big firms can benefit by collaborating with the fintechs, so they can very much respond to customer expectations quickly. They can also meet the regulatory changes quickly. As I said, the enablers part, the reg tech changes, you don't have to change your system. You just simply go and buy some products or fintech firms to adapt to your existing infrastructure so that you can meet the new regulatory changes quickly, right? At the same time, if you can't think by yourself, get the innovative ideas, solutions for your big complex problems from these fintech firms, right? And since you partner with them, you are basically minimizing the threat. How it's favoring the monkeys, the small fintech firms? Firstly, okay, first, when you start a company, you need to have plans. Instead of starting from zero, imagine you are partnering with a big firm where they have thousands of millions of clients. You can test, you can use them, leverage those clients for your product and service as well. And there are in situations whereby the big firms are even providing funds to the small tech fintech firms as a capital investment. So you don't need to raise fund for you. So you have a very, very innovative idea. You have some few people, but you don't have money to set up a company, or you don't have it. So you can very much rely on the big firms to raise funds to build your company. And let's imagine you are launching a product as a fintech product in Apple Store or Google Play. Who do you think the customers will come to you? There are two types of customers: a normal customer or the traditional customers, and the second thing is experimental customers. In the beginning, only the experimental customers will come. They know, okay, because it's a money business. For example, if some app I can see, okay, you invest $10,000 in my app, I will give you some 5% return with my intelligent AI back. Do you think I believe? Probably not, unless I get a very, very, I mean, like some legitimation from some of my friends or somebody told, okay, I invested money here, I got a very good returns. I think we have a very, very advanced investment research investment platform. You can really, you know, so that's kind of a service. But if you partner with big firms, those clients, they already trust these big companies. So if you partner with them, the trustworthiness will be maintained and they will believe your product too. So this is a way you can attract, you can go and reach the many clients, as many clients as possible, right? And once your product is liked by many customers, then obviously the success can bring you more and more new clients. And at one point of time, you can, this is not the lifetime partnership. After one time, once your product is getting sold, with more and more confident and the customers start liking it, you can opt out of this model, and you can have your own company or business after some time. So this is how, you know, it's happening. I think a lot of firms are big firms are now partnering with this kind of fintech firms to address this, especially in this COVID situation. This is absolutely required so that because the customers are very much impacted and that there's a, I mean, like the challenge is going to continue even after the lockdown is been. So we need to rely on this kind of this new business models and the technologies to come out of the situation as early as possible. I think
Vivek, we actually have some questions that have just come in for the Q&A session.
yes.
The first question that we have is, do you see startups or big banks winning the business battle to provide solutions to the market?
Let me stop my share one second. Sorry, can you repeat the question again?
The question is, do you see startups or big banks winning the business battle to provide solutions to the market?
It's a very generic question. Yes, definitely, because I would say the demand for doing business is going to change. As I said, people will less likely go to physical, branches and everything. They will try to opt virtual service, and I think if the big firms are partnering with the small fintech firms, it is very much possible to meet the demands of the customers in the future. Yes, I would say.
The next question that we have is, what impact do you foresee fintech will have on wealth management when it comes to high net worth individuals?
Okay, it's a
For
very
now,
good
I
question.
think robo-advisors are pretty much limited to retail investors.
Yes, it's a very good question. As I said, the robo-advisor is one of the biggest opportunity to disrupt the wealth management business. But I would say also so that our bank is our bank in a panic situation. I would say no, because the wealth management is such a very complex business. Let me give you an example. It's an universal business. It's an international business. I mean, like, let's imagine. So we have a client onboarded in Singapore, and through my company, he can do a business, invest money, buy assets, securities throughout the world. And it's not that easy to connect your business through the phone. So for example, he can create an one account, and with multiple accounts linked, there's a one account he can open in US, one account open in UK, one account open in Germany. And every country has its own tax and regulations. And we as a company, we know each and every country's tax and regulations, the thing. And our bankers, they know how to do business in those countries, and they will follow the things. So it's not a very simple logic. It's a very complex business logic that you need to business in every country. This, if you think, do you think this can be replaced by one robo advisor at this moment? Probably not. Possibly after, I don't know, 5 years, 6 years, 5 to 10 years, possibly you can, because the technology advancement is it's very rapid. I mean, like if you look at the last 10 years, the rate of speed is very high. Probably you might see a very high. There are some robo advisors currently available in the market. Even in Singapore, they are able to provide wealth advisory, but the limitation, they have a limitation. If the client wants to do a business probably within Singapore or within Hong Kong, with a very less, I mean, when I say less amount means probably less than $10 million means it's possible. But if you look at a client comes with a $1 billion investment, and if he wants to do business across 10 different countries, the robo-advisor is not a solution at this moment, but in 5 years' time, it could be possible. So we are not that worried at this moment, but we need to change. We already started to build our own robo-advisors. We are basically, we are in the phase of testing it. So all the big banks, they know this threat in the long run. So, I mean, like if we are not prepared for this, and we will be out after the years. So I would say that. I hope this answered the question.
Well, the next question that we have is that are there any companies out there that actually practice fintech very well? They use fintech technologies very well, that such that even these companies could be people that companies that UBS even follows.
Of course, I believe all the big firms, I mean, like follows, even we follow, but our use of fintechs is not that visible to common people because we are not into retail banking. So we are pretty much into wealth management, and so that's why you don't see the fintech flavor of companies like us. But if you go to DBS or even the local banks, I think there they use fintech phenomenally well. I think DBS consistently runs the best digital bank consistently in the last few years, and they have very good, come up with the smart digital solutions. And if you look at UOB, they also have introduced, if I'm not wrong, digital app for even wealthy customers. And but it's not, I should say, it's not as advanced as the retail banking. For example, in retail banking, you can do transactions, you can do anything you want, but for wealthy clients, it's not that easy. So at this moment, most banks use this fintech to they use for the digital KYC purpose. They use it to have an online showcase of their portfolios and everything, but not extensively for investment advisory service at all. It's still a lot of advancements are required. I would say in retail banking space, we are in good space. It's pretty much visible, but other businesses like wealth management, we are in a very early stage, but we will move to the advanced stage very soon. That's no doubt.
Well, the last question that we have is AI, blockchain, and machine learning are technologies that have created a lot of hype in the past years, but have also proven themselves of its advantages, notably in startups. What are the ways that UBS embraces these technologies in-house to make business processes more efficient or to generate profits? And
Very
also,
good
what are the
question.
challenges in implementing fintech in such a large company like UBS?
As I said, okay, let's answer the question, the last question. The challenges is adapting those fintech to our existing core bank, our banking platform, because we have such a very complex IT or a banking infrastructure. It's not that, because if you in our wealth management, if you, we are using our mainframe platform. It is centrally located in Switzerland, and it's being used across the world. And to adapt to any kind of a new fintech to our existing infrastructure is always a challenge. But it's not, I would say it's not possible at all, but we need to find ways to adapt these new fintechs to our existing platform. This is the challenge that all the big firms are facing. Look at, okay, this is like my body is like, it's my company. Wearing a watch is easy, but imagine to do a kind of a surgical heart surgery in my body, it's not that easy, right? So that's how we can think, okay, introducing a blockchain technology or something like to my existing infrastructure is doing some sort of a surgery on my own system or my body. So that's not easy, but we are changing we are improvising our existing infrastructure to make it's robust enough to adapt to any new technology. That's what every bank does it. To answer the previous question, the blockchain and machine learning and all, yes, it's pretty much we are using it. For example, we use blockchain to come up with a concept called digital KYC. So the KYC is one of our biggest painful process of doing a complete verification of our clients, and where blockchain is very much used to ease that process, the KYC. And machine learning is something like we use to predict the trends of our customers' transactions. This is where we are using it as well. For example, what sort of securities or the equities that our customers are buying very frequently, so that we can focus those kind of products and services in the future. So for the predictive modeling aspect, the machine learning and AI and all currently being used. It's in the testing phase now. We implemented in few places which started to give very good results, but not in a very kind of a wider aspect. We use AI and AI, or even I would say the RPA in within our bank to simplify operations. For example, let's take one process called onboarding a client. It's a wealth management client. It's cutting across various functions. It starts from the sales people, then it goes to middle office, and it goes to back office, and it goes to the legal and compliance team who does the verification. Finally, it goes to the archival. So multiple teams are getting involved and looking at various documents and pages and everything. And there are a lot of manual activities too. There we use this AI and automation tools to simplify the processes front to back, so that in the past it took about roughly 60 days to onboard a new client in wealth management. That's kind of a complex process we had. But with all these new technologies, these things, AI and automation and workflow and all, we are now able to onboard in 2 weeks' time. Average, I'm talking about average. So that kind of efficiency we gain by using this, fintech tools. And why we are doing it so, if I am not able to improve the efficiency of onboarding a client as fast as possible, they will go to some other company. They might go to even fintech firms. So we don't want to lose those clients, and that's why we use these technologies to improvise and improvise of the efficiency of our processes too.
Well, with that, this ends our Q&A session. I'd like to thank Vivek for taking the time out to speak about this topic of fintech. This concludes the end of our ESSEC Alumni webinar. Thank you very much to our participants as well, and please stay safe. Hopefully these challenging times will be over soon, and have a great day ahead, please.
Thank you so
Bye-bye.
much, Ian.
Thank you very much.
Stay safe. Thank you.